Okay, greetings everyone. Welcome to Wealth Creation Investing. My name is Forex Joe. Today's session, we're going to talk about support and resistance revisited. The numbers don't lie. I think this is an important area for us to review. And as we show you our charts of the gears, I like to start every day looking at the daily chart, the previous 24 hours. Those of you that are looking at a 15-minute chart, you see how hard it has to work to be able to rotate into a 30, into the 1 hour, all the way up to a monthly chart. So I'm always looking at a daily, weekly, and monthly chart as a swing position trader. And in the process, this allows me an opportunity to generate more pips. As you continue in the Forex markets, you're going to have light bulb moments, ladies and gentlemen, and these light bulb moments are going to keep you interested and demands that you give the Forex markets your quality of attention if you want to participate in the most liquid market on earth today, the $4 trillion a day Forex markets. This disclaimer we put up, if you'd like to stop the tape at this time and read this disclaimer, it's posted all over the WC website, but we do have the disclaimer here, and if you need to stop the video, stop it at this time to read it. Otherwise, we will continue. Let's talk a little bit about support and resistance revisited. Each trade that you execute is a distinct but separate entity. Now, I also like to say that each currency pair is a separate but distinct entity. It all means the same. I have become an expert on the euro US dollar because I've been trading it since 2001. If you become a client of ours, we ask that you pick a currency pair that you stock and learn everything that you can about that currency pair and focus on that currency pair along with the information you get on the euro US dollar. Trade those two pairs until you become proficient, experienced, and able to generate positive pips on a consistent basis. When you're looking at any currency pair, the key is to identify two special elements. Is the currency pair that you select trending, a directional trade, or is it oscillating, trading within a specific channel? Where is the currency pair in the overall longer term cycle? Now remember, I showed you the gears. I take a look at daily, weekly, and monthly charts. That is the overall long-term cycle. In the beginning, the middle, or the end of the cycle when looking at the daily, weekly, and monthly charts. If you are a scalper, you pay less attention to this because you're getting in and out, but you can utilize our numbers to have superb entry points to be able to pluck your 5 to 8 pips. If you're a day trader, you always close your trade by the end of the session before you turn off your computer. If you're a swing and position trader, you're trying to extend your trades for days or even weeks. Of all the indicators in technical trading, none are more fundamental and widely used in support and resistance. I like to say that the numbers don't lie. Using support and resistance and doing the studies that I found, traders worldwide, whether novice or expert, seek to determine and evaluate the future direction of currency pairs based upon the concept of support and resistance. I added in my material and found that there was recurring numbers that had strong areas for resistance and support in the Forex markets. Understanding these concepts and their effect on the trade is essential in making decent and profitable trades. It takes a little bit of time and experience. You're not going to do this if you're a brand new trader in 30 days. Treat this like an education, a college education, but the benefits will allow you the opportunity to earn an upper echelon living, an upper echelon income. Using support and resistance areas strengthens predetermined entry and exit strategies. You have a game plan going into each trade. Support and resistance never tell us everything needed to trade successfully every time. They are merely price range guidelines. However, support and resistance guidelines are important tools to use in your daily quest for more pip profits. Always be aware of support and resistance areas and use them more often and wisely no matter what trading style or time frame that you're trading. And you will be utilizing different time frames and different rules of engagements. One of the two things can happen when a currency pair approaches a support and resistance level. The currency pair can reverse direction. It's like a ball bouncing off the floor. A currency pair that hits its support can bounce up. And at a strong resistance area, it can bounce off the ceiling. These bounces, if you understand certain areas, sometimes provide 100 plus pips or more. The currency pair can break through a support or resistance level. This is known as a breakout. A breakout above resistance is seen as a bullish signal. A breakout below support is a bearish signal. These breakouts sometimes provide 100 pips or more if you're looking at daily, weekly, and monthly charts. Big light traders, which I am, I'm looking at the big lights, the daily, weekly, and monthly charts, are waiting patiently for huge pip movements. Most of the times these movements are off bounces or breakouts of key support or resistance levels. They are looking for areas to trade and pick up positive pips on a consistent basis. I drill down the daily, weekly, and monthly charts once a day. It takes me about 10 minutes. I start off with a preliminary set of currency pairs I trade often, searching for the best ones fitting my trading plan. Once located, I drill down these highlighted currencies, highs and lows of various sessions. I also use my material, including the daily chart that allows me to prepare with the software the Forex trade alerts on a daily basis. You see, by starting with the short-term, mid-term, and weekly and long-term monthly charts, you're going to gain vast experience on swing position trading. You're drilling down these charts to investigate trends, you're looking for embedded trends, and you're looking for oscillation and movements to ensure you have a clear understanding of what's going on within a specific currency pair you are stocking. Support and resistance are huge in trading longer term for management of entries, exits. There's no better feeling than being a swing trader and having several positions open, and some of these positions are 300, 400, 500 pips or more of profit, and all you're doing is managing the trade. Ladies and gentlemen, if the pairs are consolidating or retracing within channels, you can use the smaller numbers, 15-minute, 30-minute, 1 hour, for safe entry and exits. Those choosing the big light strategy need to address the importance of support and resistance for predetermined entries and exits. Before I ever push the button to complete a trade, I have my stop loss, entry point, and expected profit taking exit in place. Each trade has a different amount of expectation for pips. Many times support and resistance levels will help me predetermine where currency pairs will have difficulty penetrating or continuing onward. So I use support and resistance along with my probability factor, mathematical and statistical analysis concepts, and it is proven to withstood the test of time. I've been doing this since 2001. I did a 3.5-year exhaustive study, and since 2005 I've developed a big light strategy versus big lights trader, which I've trademarked and I own. The bottom line, ladies and gentlemen, is that if you want to learn how to become a successful trader, we definitely want your business. I want to thank you for taking time to attend this video webinar. I want to encourage you to visit our blog on wealth creation investing. My name is Forex Joe. Till next time, may all the pips be with you.